Welcome to my $100,000 stock experiment, year 3, week 5, ending May 15th, 2020. This isn't an endorsement to purchase any stocks that I've bought, nor an endorsement to purchase stocks in general. I'm on a mission to become a great growth stock investor. Watch me on my journey, learn from my mistakes, and celebrate my successes. According to the IBD at investors.com, the market is in a confirmed uptrend. This is an S&P 500 6-month chart. I have a blue line at 2817, and for me, the last 4 weeks, this index has been going right along that line, sometimes above, sometimes below. But I think this market is really going sideways. So while it isn't a confirmed uptrend, I don't really think that it is a strong rally. This week, Tuesday and Wednesday were really rough days with those long red bars. This index did drop below my solid blue line at 2817, but then on Thursday and Friday, it popped back above it. The volatility index is also up slightly. It closed the week at 3189. The lower, the better on this one. I like it to be between 12 and 16, but it's a long ways off from that. And when this index first jumped way above 16, I had put a line at 24 where I wanted to see this index low before I started buying stocks. Again, we're way off from that also. The most important rule I have for my stocks is to have a stop limit order set for every stock. I call this my floor. When I first buy a stock, I put this at 8% below my purchase price. Twilio. I made this purchase on Friday. It may look extended to many. I like the increased volume in this stock. It had a big gap up over a week ago with huge volume, continued up for 4 days, and then sort of settled into a sideways pattern, which I think is a good sign of consolidation. And it didn't break below its gap up day. This stock market is very weird, and normal growth stocks aren't doing well, I don't think. So I really like the pattern here, and hopefully I didn't make a mistake and this stock will continue to go up. I raised my floor up to that pink 8-day simple moving average. I've held the stock just the 1 day and it's down about 1%. When the floor gets triggered, my stocks sell. I sold Microsoft, Now, and Quidel this week. Here's a holdings bar chart for the stocks that I sold. You can see Microsoft I held for a portion of 6 weeks, and it went up nicely, then it dropped back down, went up again, and then came back down. So I went ahead and sold that. Now also had climbed up really nicely, but then it dropped back down and triggered a sell. Quidel I had a great gain on. I held it for a portion of 2 weeks and had over almost a 15% gain on this stock. Microsoft, I got shook out of this stock when it dropped below its 16-day simple moving average on Wednesday. I had 2 buys. One I held for 5.5 weeks and it was up almost 6%, and one I held for just about 4 weeks and it was down 1%. Now, I also had 2 purchases in this. Last week I set my floor at the 8-day simple moving average and it triggered that again on Wednesday. It's since popped back up to its 8-day, and I'm wondering if I should buy this stock back. My B1 I held for 4.5 weeks and had a 20% gain, and my B2 I held for just over a week and I had a 5% loss. Quidel Corp. I bought this last Friday on May 8th. It gapped way up on Monday, and I moved my floor to 1% above the purchase price that day. On Tuesday, I wanted to see this stock hold at that green arrow, which is the low of the day that it gapped up, the Monday. But Tuesday it went down, and I decided I had such a nice gain in this stock. I raised my floor to 15% profit. I'd be happy if I made 15% in this, even though it had been up higher than that. On Wednesday, it dropped down below that. To me, this was broken. I didn't know if it was going to continue falling, so I'm happy with my profit. I thought the stock was extended when I bought it, but then it ended up making 15% in 3 days. On Thursday and Friday, it recovered some, and then on Friday, I decided to buy it again. I did miss out on about a 9% gain from when I sold it on Wednesday to when I bought it on Friday, but my Friday purchase is up just about 2% in the one day, and I did go ahead and leave my floor on this at the 8%. I review my charts every week and I look if there's a spot to raise my floor. Enphase. This stock started out the week up, then it retreated and then went back up a little. It's lower than it was at the beginning of the week. I'm up almost 3% and I've had it just over a week. Insight Corporation. This is my loser stock. I'm thinking of dumping it. I didn't want to move the floor up to the 31-day exponential moving average because it might just trigger a floor. I'd rather take a look at it on Monday and maybe just sell it at the market rate or whatever. I didn't know if it was broke or just consolidating, but I did review it on MarketSmith and I decided I do need to get rid of this stock. I've held it for just over 4 weeks and I'm down 1.4%. Veeva Systems. I've held this stock for 2.5 weeks and it's up 6.3%. It's still straddling the 8-day simple moving average, which is that pink line, sometimes above, sometimes below, but it hasn't gotten down to the 16-day simple moving average, the green line. I didn't feel comfortable moving the floor up to that 16-day simple moving average, so I went ahead and moved the floor up to 1% above the purchase price. Chipotle Mexican Group. Last week, this stock finally broke out of its sideways pattern, and it continued to go up this week with the down days on Tuesday and Wednesday, just like the rest of the market. But it did have a new 52-week high, and I raised my floor up to that green line, the 16-day simple moving average. So I'm slightly below my purchase price. I've held this stock for 3.5 weeks and it's up 8%, which is a nice gain. Slack Technology, stock symbol WORK. I've held this stock for just over 1 week and it's up just about 1%. It's really doing nothing for me. It has big daily swings and is going sideways. It does have earnings in 19 days, and I moved my floor up just pennies to that 16-day simple moving average, so I'm slightly above that 8% mark. Adobe. This stock had a rough week. It was down Tuesday, Wednesday, Thursday, and then finally back up on Friday and closed at the top of the range, which is a strong sign. So I hope that this stock has recovered from its 3 down days. I did raise my floor to that 31-day exponential moving average. I have a 3% gain and I've held this stock for just about 2.5 weeks. A super important rule is to don't let a double-digit gain turn into a loss. Datadog. This stock is crazy. It shot up so fast. I don't typically raise my floor during the week, but I went ahead and did this with this stock. On the 11th, where that circle is with the 11, I raised my floor up to the 8-day simple moving average. The next day, I moved it up so I would take a 20% profit if I sold. And then on Wednesday, the 13th, I decided to use the decline from the peak rule. So I took what the high was, and then I took 15% off of that and came up with a floor of 61.32. I didn't change my floor over the weekend. This stock also has super increasing volume, which you can see down at number 1, and I'm thinking I might want to buy more of this. I've held it less than 2 weeks and it's at 43%, which is crazy. DocuSign is also moving up fast, and I did raise my floor in the middle of the week on the 12th, which is Tuesday. I raised it up to the 8-day simple moving average, and then over the weekend I did not change that floor. I have 2 buys in this stock. The first one I've held for just about 5 weeks and it's up 30%. And the second buy I've held for 3 weeks and it's up just about 20%. Shopify. I've held this stock for a week and a half and I'm up 11%. I did raise my floor up to that 16-day simple moving average when I was making my adjustments, but I really want to move it to 1% above the purchase price. I'll do that on Monday because once I put in my changing of the floor, I can't do it again until the market's opened. The current holding bar chart really highlights the strength and acceleration of Datadog and DocuSign in the brown and the orange. Other stocks that are having a nice increase are in the light blue, Chipotle Mexican group, and Shopify in the gray, and Viva in the dark blue. Each bar represents 1 week, and this is on my B1 purchase, my $10,000 buy. Anything below that dotted black line is losing, and then that solid yellow line is my 8% floor that I put in when I do my initial purchase. I take the percentage gain of each stock for the week and I sort with the losers on the top and the winners on the bottom. Each box here represents 1 week, and the stocks that I've only held for the 1 week, that's not the gain for the entire week, that's the gain of since I've made my purchase for the week. Even though Twilio and Adobe have a loss for the week, the S&P 500 had a greater loss, so everything on this list outperformed the S&P 500. And down at the bottom, Datadog, amazing, 30% this week. DocuSign and Shopify had 8%, Viva had 4%, and CMG had 5%. So a great week for most of the stocks that I own. This is the dollar value gain, again, sorted with the losers on the top. If I take care of my losers and focus on getting rid of those, then I can let the winners just take care of themselves and keep on running. My industry breakdown is showing that I'm still super concentrated in software, and I put the dollar amounts over in that cash section. So software, I have $86,000 invested in software. My second biggest sector would be cash with $27,000, followed by medical with $20,000. And then number 2 at DocuSign shows that I have 2 buys in that stock. The rest of the stocks, I just have a B1 purchase. My total gain was over $6,000 this week. My existing holdings contributed to most of this. My new holdings had a small gain. The stocks I held last week and sold this week had a $500 loss, plus I got a little bit of a dividend. 2 years and 5 weeks into my experiment, my $100,000 has grown to $154,632 versus the S&P 500 for the same time frame has grown to $107,808. In the yellow, you can see my year 1, my year 2, and my year 3 gains. The purple is showing the weekly change, and then down at number 1, that is showing this week. Week ending May 15, 2020. For this year, my 5 weeks, the S&P 500 is up 2.6% versus the Melissa Method experiment up 6.9%. My weekly change was 4.3%, and the S&P 500 was down 2.3%. I have a cash balance of just over $27,000. I'm going to spend my time this week reviewing charts, looking for this increased volume with increasing price. Here's a quick look at my watch list this week. I have Datadog on there, which I already own, so that'd be an add-on buy, as would Quidel Corp. And ServiceNow is on there, which I just sold last week, but I'm thinking of buying back. Take-Two, Neurocrine Bioscience, Bandwidth, Dexcom, and Genmab are all stocks that I don't currently own and haven't recently owned. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel, The Melissa Method. Don't forget to hit the bell if you want an alert when I post a new episode.